The FANG earnings have been incredible so far, and Google was not the exception, and you're going to see why. Hello everyone, welcome back to the channel. Today we are going to talk about Google, their earnings, and everything that they reported yesterday. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with YouTube algorithm. Now let's go to my computer. As we can see here, the stock is actually up 1.35% in the day and down 0.92% after hours, but the stock is at $2,700. We do know that in the last year, the stock is up 74% and still up 239% in the past 5 years, but most of that growth has come since 2020. As we can see here, that it has gone up 150% because the growth that the company have been having in the past years have been incredible, even though it is such a big and old company. Now, they did report earnings yesterday, and Alphabet reports better than expected quarterly profits and revenue. The company shares leaped 2% after the results. Still, earnings per share were $27.99 per share versus $23.48 expected. They have earnings per share of $27.99 per share, and they're not paying dividends. They could easily pay dividends with this. $27.99 per share. And revenue, they reported $65.12 billion versus $63.34 billion according to estimates, beating analyst expectations. YouTube advertising revenue, it was less than what it was expected, as they reported $7.20 billion versus $7.4 billion. Same with the Google Cloud revenue of $4.99 billion versus $5.07 billion expected. And traffic acquisition cost was $11.50 versus $11.16 billion expected. Something that I liked a lot was this article. Google nearly doubled profit behind red hot ad market. As we know, everything that has been going around with Snapchat and Facebook in the last week as they reported their Q3 earnings. But something that I like here is that they said that Google tallied its highest sales growth in more than a decade and nearly doubled its profit in the third quarter. Highest sales growth in more than a decade for such a big and old company. They had their highest sales growth in the last quarter for a decade. Now, something I like here is that in the recent months, as I said, the search giant's retail ad segment has benefited from new privacy policy Apple Inc. rolled out since April. The iPhone maker has required apps to ask users whether they want to be tracked. The changes have weakened the performance of ads of Facebook and Snapchat, as we saw in their reports, even though Facebook did pretty well in my opinion. According to ad buyers and smaller businesses, many brands have shifted spending to Google as a result, meaning that Google has been benefiting from all this problem around the iOS 14, while Facebook and Snapchat have been struggling, even more Snapchat than Facebook. Now we can see that Facebook is a $1.8 trillion company, and they were able to report a 41% growth year over year this last quarter. It has a 30 PE ratio, which many might think that is really high, but if we see here, we can see that the PE ratio is just as it has been in the past years. So it's right now at 30. Here it says that it's at 29, but still it has been kind of around the same PE since 2014, not in 2017. Still, it has been around, so I believe that it has a nice PE at the moment. And it has a forward PE of 26.95, way better, and a price to sales ratio of 8.59. So in my opinion, this was excellent report from Google. We can see here that the revenue was $65 billion, a 41% growth as I just said, and their operating income grew 32% from $11 billion to $21 billion. Almost $10 billion in growth in operating income. That is obviously incredible. Something I liked here is that we need to understand their segments, and their Google search and others were reported $37.9 billion, all the way up from 26 in 2020. YouTube ads to $7 billion, Google network to almost $8 billion from $5.7 billion. So the Google advertising ended up at 53, all the way up from $37 billion. Then their Others grew from $5 to $6 billion. So the Google services total went from 42 billion to almost $60 billion, which was a huge growth. We can see here that the Google Cloud grew 44.8% from $3.4 billion to $4.99 billion. And their other bets also grew from 178 million to 182 million. But something we do have to notice is that the only profitable segment is their Google services. So their ads, basically from Google Search, YouTube Ads, Google Network, Google Advertising, and Google Others. So that is the only one that is profitable at the moment, with operating income of $23.9 billion, all the way up from $14.45 billion. Now, the next one would be Google Cloud, which is not profitable yet, but is almost getting there. As you can see, they are all the way up from a loss of $1.2 billion to $644 million. So we can see that the Google Cloud was up 44.8%, but Google Cloud operating income improved 46.6%. I cannot say the same about other bets, as we can see that their net loss actually grew. But still, the cloud business could be their next profitable business, and that could be very nice and for the growth of the company. Now, they did mention that they repurchased and subsequently retired 4.6 million aggregated shares for $12.6 billion, which obviously we always like to see this kind of companies repurchasing their stocks, their shares, and also investing into the innovation and growth of this company. Now, their balance sheet, you guys know that I love the balance sheet of almost all the FANG stocks. Facebook has a nice balance sheet, Apple has a nice balance sheet, Google, you're going to see that has a nice balance sheet. As you can see here, they have $184 billion in total current assets. They only have $23 billion in cash and cash equivalents, as it went down since December, but their marketable securities went up to $118 billion. So they have total assets of $347 billion, current liabilities of $61 billion, and total liabilities of $102.8 billion. I do have to say that they only have a long-term debt of $14.2 billion. So they could easily pay off that debt whenever they want with their cash, not only their current assets, but only their cash with $23 billion. Now, they do have a nice current ratio of 2.9. You guys know that everything above 1.2 is excellent. So 2.9 is really good for this kind of companies, because they're able to invest in new businesses or innovation to the company to continue seeing this kind of growth, because 41% of growth is not an easy growth for any company. There are a lot of companies out there that do not have this kind of growth. Now, we can see here on their revenue that, as I said, the revenue grew 41% to $65 billion. Their cost of revenue did increase, but not as much, from $21 billion to $27 billion, same from research and development to almost $7.6 billion, sales and marketing to $5.5 billion, and general and administrative from $2 to $3.2 billion. So the total cost expenses increased 26%, which is normal to see the cost and expenses increasing while they're having such a nice growth, because they're growing 41%, but the total cost and expenses are only growing 26%. This is perfect and excellent management from the company. The best part here is their net income. It grew 68%. And you guys know that I always like to see their net income growing at least at the same pace as their revenue. But here it was way better, 41% of growth for the revenue, but 68% for the net income. Now, obviously, I'm very impressed from this earnings, because we sometimes don't take into consideration this type of companies because they are old, or they are too big, or they might be very overvalued, so we don't like, or we don't feel comfortable investing in them. But we don't notice that this kind of companies are still growing over 40% year over year, even though they are almost a $2 trillion company, and they're really old companies and very well-known companies. So people prefer to invest in more growth or more small cap or mid cap companies because they're going to have a better return in them. But we can see that the stock is up over 70% in the past year. That is an excellent return for any investment, and the company is growing massively year over year. So that is why I believe this is an excellent company to invest in the long term, as well as almost all of the FANG stocks. Now, I'm investing in this stock in my M1 Finance portfolio, but not in my Robinhood portfolio because I invest in this company monthly with my M1 Finance portfolio. I will leave a video here on my Microsoft analysis as I posted it today as well. Thank you and see you next time.